Hello, and welcome to the latest episode of Zach's Tech Talk Tuesday. My name is Ryan McQueeney, and on this week's show, we will be taking a look at a major headline from the healthcare technology world, which I know we don't cover too frequently on the Tech Talk Tuesday show, but definitely one that still should be on the radar of our listeners, especially with Paul Singer's Elliott Management offering to buy Athenahealth at $160 per share on Monday morning. We got that news officially after hearing some rumors about it previously. Athenahealth, for those who don't know, is one of the bigger names in the healthcare tech industry, sub-industry, whatever you want to call it. It's a provider of network-enabled services for healthcare and point-of-care mobile applications. The company was co-founded by Jonathan Bush, President George W. Bush's enigmatic, outspoken, polarizing, whatever adjective you want to use, cousin. Bush still serves as Athenahealth's CEO, and we will touch more on that later because it seems like it might be a key point of interest in these negotiations. Athenahealth currently has a network of about 100,000 providers and 98 million patients, so it is certainly no small fish in the healthcare tech landscape, which is, to me, largely compiled of smaller players, smaller startups with bold visions of the future and how their innovative or disruptive technology can improve care, but those still looking for investments and funding. Athenahealth is not that. This is a 20-year-old company, or more than 20 years old, founded in 1997 and held its IPO in 2007. Has a suite of different products. It includes Athena Collector, which is a revenue cycle management solution, Athena Clinics, which is electronic health records, Athena Communicator, which it deals with patient engagement and care coordination. There's also Athena Health Population Health, which is a population health management tool. Lots of different products, a whole suite, as I said, really wide-ranging. Again, one of the major players in healthcare technology, certainly a name that is familiar to many doctors and healthcare providers around the world. Elliott Management's offer actually represents a 27% premium to Athenahealth's closing price on Friday. This is an activist firm, and it originally took a 9.2% stake in ATHN, that's the ticker, about a year ago. And on Monday, said its current stake was a little bit smaller at 8.9%. I want to note that it's an activist firm because, and we'll get into it in a second exactly what the company wants or what the firm wants to see. Athenahealth has seen itself be the target of activist investors in the past. Einhorn, I believe, is one that had targeted it several years ago. The real story here is that ATHN has really struggled to generate much momentum since reaching all-time highs in 2014. Actually, the stock is down about 35% from its all-time high. And so we've seen people, now in a couple of noteworthy instances, activist firms come in and say, we see potential here. We love this disruptive vision. We love the product, or we love the suite of solutions. We just want to generate more value to this shareholder, which is, as we often see with activist investment firms, we're going to come in and kind of make an aggressive takeover type of offer. Now, will Athenahealth accept this offer? It's still yet to be determined. But where is this coming from? Elliot said it has had positive discussions with management and has, quote unquote, greatly appreciates the time that it is spent with the management team. They specifically cited Jonathan Bush in the open letter that they released on Monday morning, saying that Bush and the board were, quote, invested in evaluating our perspectives as well as the perspectives of our fellow shareholders, end quote. However, Elliot did say that Athenahealth revealed a quote-unquote unwillingness to consider alternative options for achieving shareholder value. This is what happens with these activist firms. In a lot of times it's, all right, let us buy you out. And as soon as the answer is no, the movement starts to get a little bit more aggressive. The firm apparently approached Athenahealth last fall in regards to a take-private deal, and Bush's company refused to engage. That is, again, according to the open letter that Athenahealth submitted that Elliott management sent to Athenahealth on Monday. As I said, shares of Athenahealth have been an up and down ride over the past few years, with the stock struggling to generate much upward momentum. Elliott's proposal would be worth up to $7 billion, including Athenahealth's debt. Now, I want to touch more on Jonathan Bush before we move on to anything else, because he's a very public and very outspoken voice for the company, but also voice for change in the healthcare industry, especially here in America. He certainly has accolades. He's been with Athena since day one, helped co-found the company. He was named CEO of the Year by the Massachusetts Technology Leadership Council in 2013. In 2016, he received the Tufts Award for Visionary Leadership in Medicine, and that Fortune has called him as a disruptor. Put him in its list of 34 leaders who are changing healthcare. However, kind of noting that he is persuasive and outspoken. Again, has a certain personality to him that I think is going to play a factor here in these negotiations, if there are negotiations to be had at all. Of course, really anyone with the last name Bush, anyone tied to the Bush family, is going to have a certain amount of controversy and public opinion tied to them for many, many reasons. Bush, I don't know if this really matters at all, but he has been in the past kind of a partier in a sense. The company made headlines. This is going back to about 2014, but the company did make headlines for its More Disruption Please conference, which Fortune described as the animal house of corporate gatherings. Apparently, they bought this event space called Point Lookout. It's a big resort area. Athena bought it in 2011 and used it as an employee training and client entertainment facility, and had this, like I said, More Disruption Please conference every year where they would have clients and investors and stuff just come and basically party. This Fortune profile that came out several years ago certainly painted Bush as a bit of a life of the party type of figure, and kind of juxtaposed that with the fact that the company was facing activist pressure already. So I think that it'll be interesting to see exactly how this plays out in the public sphere, because Bush has certainly been a public advocate for the company and a public kind of target from people who are critical of the company in the past. And when something like this happens, the CEO is obviously going to play a major role. So that'll be a key there. Now, I do want to reiterate, this is a really major player in the healthcare tech role, which, is a buzzword, certainly a polarizing buzzword. Some just throwing healthcare tech on an idea over the past few years has been certainly an interesting technique. I think there's a lot of skepticism around certain, the legitimacy of a lot of different ideas. If we can just build a mobile application for every sort of sickness and problem, and, try to bring technology into certain types of treatments that have been working for a really long time, people see that as, chasing investment dollars or whatever. However, I really don't see that in Athenahealth. Again, they're widely used products. They're good products. They're industry leading products in a lot of senses. So this is certainly a company that has been able to push past the point of these kind of recycled ideas in healthcare tech that can be very publicly criticized. It is certainly a company that had a lot of momentum about 10 years ago, the IPO, and then kind of soaring into, like I said, the all-time highs that it reached in 2014 been a struggle since then. So it definitely makes sense to me that an activist firm would try to make a play like this. Definitely could be something, this move could be something that Athenahealth investors that have been kind of just holding on to the stock for a while now would view as a positive change, or just an opportunity to get out of the company for a little bit of return there. So I don't know. It'll be definitely incredibly interesting to watch this play out. A ton of money changing hands here, as I said, up to a $7 billion deal. Anytime we get a $7 billion deal in the technology sector, but it's definitely this kind of healthcare tech sub-industry, that is something major and certainly something to keep our eyes on. I'll be watching this one as time goes on, and hopefully it will inspire more activity and fun investing in the healthcare tech landscape, which I think we were really hearing tons of headlines about a few years ago, and then the trend kind of died down for a little bit there. Maybe this is a sign that, we're ready for a new phase of interest and activity in this space. Either way, I'll be keeping my eyes on this one. And that does it for today's episode. As a reminder, if you feel that we missed something, or if you want us to cover a different story, shoot us an email at podcast@zacks.com. Make sure to check out all of our other audio content at zacks.com/podcasts. And remember to subscribe and leave us a rating on Apple Podcasts. Remember, we are also now available on Spotify. All of our shows, just search Zacks Investment Research on that app, and you should be able to find us. Thank you for joining us, as always, on the Zacks Tech Talk Tuesday podcast. We will see you next time.